Hello. Hi guys, this is Sanjay here. Can you guys hear me? Can you type in if you can hear me? Yes or no? Okay, great, great. Thank you. Okay, we're just gonna wait for one more minute and then we'll get started. Hi folks, thanks for joining in. I'm just gonna wait for a couple of more seconds for everybody to join, then we'll get started here. Okay, I think it's time to get started. Thank you again, guys. So I just want to make sure that everybody can hear me okay. If you can just say yes, if you can hear me. and then we'll get started. Okay, great. And you can see me and you can see the screen, I believe, right? Okay, cool. Okay, guys. So I want to thank you all for being here at this hour of the day. After a busy day at work, probably. So I want to just thank you and appreciate all you guys being here. One of the most interesting things about people wanting to know, or the curiosity has always been, is where should I invest my money? That's always been a question, in our mind, right? Everybody wants to know, where can we invest our money? What options are available out there? When you earn the money by working hard, who would be the most interested in growing your money than yourself? Nobody else, right? Other than yourself, right? Yet what we do is we depend on people around us to get ideas. We ask our neighbors, what they've been doing, where they're investing, or you ask your colleagues, your friends, your boss, and they will give you answers based on their experience and has been, what has been good to them. It all depends on a lot of things, when they entered the market, what they invested in, how long they have been investing, what is their habit of investing. But we don't talk about all those things, right? So why not we learn ourselves how to manage our own money? I don't know if anybody else is more interested in my money than myself, so I want to learn about it. And that's the main reason why I joined this business, is what options are available, what solutions are available, so that I can make better choices for myself and I can make some educated guesses or educated choices to invest my money, as simple as that. So again, going back to why this business, who we are and what do we do. So I'm going to share through a concept called X curve. First of all, let me ask you guys, how many of you have heard about this concept or know about this concept? Can you guys quickly say yes or no on the chat? Okay, so no, no. Okay, cool. Thank you. So that's great. So I'm just going to go through all that, and it's as simple as it's an X. So let me just go to the next screen. So it just looks like an X. There are two lines. One is going from the left top to the bottom, and one is going from the left bottom to the top. And then there is one line on the bottom which tells you about your age. So let's start from the young age, and to the old. So young would be between 0 and 17, where we spend most of our time in education. Between 18 and 29, where we try to build our wealth. And then 30 to 59, we build up the wealth. We also want to protect it. And then 65 plus, we want to take care of our health and also as well income in case if we live too long. And what are these two the rows is that the one which is going up from the left side is your wealth. So initially when you're young, our wealth is almost zero, like we don't have any our savings, right? And the top one you see from there is our responsibility. So when you're young, when you're married and you have a house, you have two kids, you have a car, you have a mortgage, your responsibilities are more and your wealth is probably less. And so, but as and when you age, your responsibilities come down and your wealth is supposed to go up. So one of the things what we teach people is, how do we calculate our responsibility towards our family? So in today, like today, what is your responsibility to your family? Like, let's say you go to your job and then you don't come back for any reason. It could be that, God forbid, things happen, right? That you made an accident, or, you had a stroke, or it can happen to anybody. If that happens, so what your family need to have in order to go through the financial loss. Obviously they will have an emotional loss to go through. What will be their financial loss? So how do you calculate that? We calculate is called DIME. The D stands for debt. So the debt are all of your credit card loans, your bank loans, your student loans, your car loans, your business loans, all of that. If you add them together, typically, a household has about maybe $50,000 in loans. And the next I stands for income replacement. Income replacement is the income which you're making right now. You need to have at least 10 years of income saved up for a family so that they will not have to go through the financial loss, once you're not there to support them. So if you're making 100,000 a year, you need to have at least $1 million be available to them. The next one is called M for stands for mortgage. So let's say a scenario that you've been paying your mortgage on time for 15 years and then you pass away. And your family is not able to afford the payment and they don't make the payment for 3 months. So what do you think the bank will do to them? Do you think the bank will just let them keep the house? No, right? As soon as the 3 months are over, they're just going to come and foreclose the house. So you want to make sure that the house is paid off, that the family is at least does not become homeless. And the last one is your education. You want to make sure that you have enough money saved up for your kids' education. If you have one kid, it'll cost you about 40,000 a year. If you calculate that for 4 years, you need at least 160,000 to 200,000 saved up. So if you add them together, it's about $1.5 million. You need it today. So do you think, we have that money sitting in the bank? If you have, that's great. You have a great plan. You don't need this protection, but most of us don't. So what you do is we pass on this responsibility to insurance for pennies on the dollar, that you can get like $1 million and $1.5 million coverage for maybe $100-$150 a month, so that your family don't have to go through all that financial loss if something happens to you. I feel really bad when I see all this GoFundMe account showing up on Facebook, is where the family is asking money from the crowd. I mean, which is really saddening. I don't want my family to go through that, right? When there is an option available, we spend $3-4 on coffee itself on a day. If we spend that much on an insurance, like a term insurance, we will be covered for this much amount, that if something to happen. So this is one of the areas we tell people to how to protect their family. Now let's move on to the next topic. And one of the question I think I want to ask you guys, that if you have any questions, please post it on the chat, and I will answer it, at the end, and so that we don't forget about it, right? So just write it on the chat, and then I will answer it at the end. Okay, now let's move on to the next topic. Is we talked about the area of protection. Here the responsibility is coming down, and hopefully, your wealth is going up from the left to the right. So there are 5 factors you should consider when we make any type of investment. The first one is that the investment has to be growing, that it should not be sitting on a bank making 1% interest. Is actually you're losing money if you calculate the inflation. So it needs to grow continuously. It needs to be safe. It needs to be protected. It needs to beat inflation. And the last one is it needs to have a proper tax planning. Let's just cover it up one by one. So the first one is a growth, which is pretty easy, right? That you need to have continuous growth. So you want to invest where your money can grow. So there is no else reason to invest, right? I mean, there's no reason. If you're putting it in a bank, you're actually losing money, because inflation is about 3 to 4%, and the bank gives you 1%. You're actually losing 3% every year. So you want to invest in a vehicle which will make sure the money is growing every year. Now let's talk about the second one, which is safety. So what is safety? Safety is you want to make sure that your returns are always in the positive side. You should never lose money. I know that this is probably a surprise to a lot of people, but I can show you a way to earn market returns, but you lose nothing when the market goes down. I'm sure you'd be interested to learn, right? So that is one thing we teach people. So we guarantee that you will never lose money. Now let's talk about the third topic, which is, so we talked about the growth, we talked about the safety. Now we're going to talk about the protection. So there are three types of protection you need to have to secure investment. You want to protect it against lawsuit. In this country, anybody can sue you, right? So you want to make sure that they cannot tap into this wealth of yours or this investment of yours if they come after you. And also bankruptcy. I'll tell you in the next few slides that all of us are one step away from filing bankruptcy, and this money should be protected from filing bankruptcy, because the first thing they're going to do is dissolve all your savings, dissolve all your investment which you have made through your brokers. So you want to make sure that the money which you're putting on this vehicle is protected against the bankruptcy. And the third one is, you want to make sure that this very last gift you can leave to your family, and it is safe and it is protected. Let's talk about the fourth one. Fourth one is the inflation. Obviously, that's kind of pretty self-explanatory. If I'll ask you, what was the cost of the gas, when you came, maybe like 10 or 15 years back, or, and how much is it today? If you compare it, you see how much the gas prices have increased in the last 10 or 15 years, right? But has your income been proportionate to that? Probably not. If it is, that's great, but most of us don't. It has almost doubled up, and I don't think a lot of people have doubled up their income in the last 10 or 15 years. And the cost of if the cost of goods keep going up and your income keeps shrinking, then what will happen when you're about to retire, right? So you want to ask that question. So you want to make sure that wherever you're investing, it is beating that inflation. You need to have at least 7 to 8% return, on your money to beat that inflation and then grow that wealth, which you needed in your next stages in retirement, in your retirement. Now let's talk about the last step. It's very important to understand how taxes work in US, right? This is one area will catch a lot of people by surprise in the future. So the first one, so there are three brackets. One is tax now. A lot of us, we have jobs, we get W-2. So the tax is deducted at the source. That means if you're making $100,000, you are at the 20%, 25% tax bracket, you get $75,000. So there is a number two, which is tax later. We have a lot of vehicles like 401k, IRA, all of those where we invest money where we don't have to pay taxes right now. So let's say I'm giving $500 a month. My company is matching $500 a month. So I'm saving up $1,000 a month. So at the age of 65, my savings are on the 401ks for $500,000. Let's say I need about $5,000 a month to live in retirement, right? But what if the taxes goes up 50%? And chances are it will. If you look at the current debt the US has, is almost $22-23 trillion. Who's going to pay that, right? So it has to be the taxpayers. And if you go back and look in the history, in 1970s and 75s, the tax rate were really high, almost 60-70%. And chances are it may come back up. And at that time, at the age of 65, you won't have any deductions. Your house would have paid off, your kids would have gone to college, whatever income that you will be making, everything will be taxable. So if it is 50%, you'll be left with $2,500 a month. So what will be your plan B at that time? So that is the third bracket. Not a lot of people know that it's called tax never. What if I can show you a way to invest where you make money when the market is up, you never lose money when market goes down, and you pay 0% taxes. I tell you 0% taxes when you're ready to pull income at retirement. Would you be interested in learning what it is? I'm sure you do. So that's the second area we teach people about how to build a tax-free wealth. So if you think about it, it's not how much you save that matters, it's how much you keep after taxes. So we just go through, so let's just go through the scenario again. So we got the tax now, you put in after tax dollars, but the growth is taxed each year and included in your estate, meaning that if you are in a bankruptcy or even in a lawsuit, all of that is included. Tax deferred is your 401k, the IRAs, the 403bs, the annuities, and all that. You put in before tax dollars. IRS has a 10% penalty for withdrawals, but if you want it before 59 and a half. Everything is taxed at distribution. You have contribution limits. Withdrawals of 44,000 or plus will cause 85% of your Social Security to be taxed. And you have to have a required minimum distribution at age 70. Like after age 70, you have to take money out. Otherwise, there is a 40% fine from the government. And there is a 50% excise tax if the RMDs are not taken. And it is included in your estate. But tax-free is put in after tax dollars. Obviously, you pay the taxes now, and then you invest. No IRS penalty. Growth is 100% tax-free. No contribution limits. You can put as much as you want. Withdrawals do not cause Social Security to be taxed. No required minimum distribution or excise tax, not included in your estate, and you're going to have a tax-free income. Tax-free, so that bracket, so you have a couple of choices. One is the municipal bonds, but the rates are very low, maybe like 2 to 3%. But it counts against your for financial aid. And it may be part of your estate as well. And then we all know about Roth IRAs, that they're also tax-free. But you have an annual contribution limit of $5,500. And then you also have income limitations. Like if your family income is more than 200K, you won't be able to make any contributions to a Roth IRA. And then it also is tied up to the market fluctuations. Like if you think about 2008, 2001, what if you will be retiring at that time? Your whole savings should have gone down 40%. And obviously it counts against you for financial aid and parts of your estate. But the third bracket, which is the life insurance cash value, it has got no contribution limits. There are index contracts available where you don't lose money at all, but the money will grow if the market goes up, and it does not count against your financial aid, and it is not part of your estate. So what is the index contract? If you look at the power of the index contracts, if you look at it, like if you would have just take an example, let's say 100,000 invested in 1997. You see how the market went up, and then it went down in 2001, 2002, and then it went up again, and then it went down in 2008, and now it has been going up, right? So if I've invested $100,000, you would have made about 219,000 in 2014. But if you have invested in an index contract, you would have 245,000 sitting on your account. And look at the time when the market went down. It logged up at that. You did not lose money. You see on those 2 years and these 2 years in 2008 and 2001, you did not lose any money. So that's very important, right? That you have that, state of mind that your money is safe and you'll never go down. You'll never lose money. So if you look at it, the losses hurt you more than your gains can help you. So let's look at an example. Like let's say you lose 50%. So you started at the year one $10,000 and you had a 50% loss. So your gain is now your loss is 5,000. So you end up at 5,000. Let's say the next year, the market went up 50%. You actually gained only $2,500. So even though the market is back, you're saying market went down 50%, came up 50%, you actually end up at negative $2,500. It's a 25% actual loss. you actually need 100% gain to recover from that 50% loss. So it's very important that if you don't lose money when the market goes down and then you start making money when the market goes up, that's very, very safe. And also that will grow your money to have that retirement income which you're looking at. So with index contracts, you never have to recover from a loss. Let's look at a case study. A lot of people, we invest in 401k now, right? I'm not saying that it's not a bad vehicle, but I'm just giving a comparison for you to make that, compare and make a decision of your on your own, right? So there are two brothers. They both started at age 35, each married with two children. Both are saving the same amount of money, earning the same 7.11 interest rate, and for the same period of time. So the brother A believes in the old way. So he makes a $7,850 to 401k, and the employer matches $500. Some employers matches more, some less. Let's say he's get $8,350, and then he's also bought an annual term insurance for $550 for a $500,000 level term. So his out of pocket is $8,400. The same brother B is doing the $8,400 out of pocket, but what he's doing, instead of doing the 401k, he's putting all this $8,400 in an annual IUL insurance premium with a $500,000 face amount. That means if something to happen to him, your family will get a $500,000, and on the side, all of that money is going to be saved up on an index contract. Let's say who made the right decision. After 30 years, brother A has made $861,000 on 401k with that 7.4 gain, and his term insurance has now expired. So he has got no coverage. And if he wants to buy at that age, it will cost him at least $20,000 in annual premiums. But he has saved up about $77,000 on tax savings because it was tax deferred. So, but his total retirement is $861,000. And brother B has $670,000 cash value, but his death benefit has gone up to $1.1 million. And he also has the accelerated living benefits. I'll cover that in the next slides. And he doesn't have to pay any more premiums after 30 years. So if he dies at that age, his family will get 1.17. But if he lives too long, let's see how much retirement he can get from there. So you see this, the brother has 861k and the brother B has 670. He has less, right? But let's look at the next. So the brother A, total retirement income is 861k. He starts getting 46,000 annual income from there. But because he has to pay taxes, he has to actually withdraw 69,000 in order to make up that $46,000, because the 17,000 will be paid on the taxes. So he is withdrawing 70, almost close to 70,000 to get to that 46,000 annual income. The same thing here, brother B, with a 670,000 retirement income, he is taking a 46,000 annual income, and that is termed as a tax-free loan. So he doesn't have to pay any taxes. So he pays $0 on income taxes. In 12 years, at age 77, brother A runs out of money. There is no death benefit, no accelerated living benefits, nothing left. But brother B receives a guaranteed tax-free income until age 121. He still has a death benefit and accelerated living benefits of $472,000 at age 80. You see how that is so, you see that the difference between the two brothers, and which plan makes you feel more financially secure, right? It's a no-brainer. So this is what we teach, is what are those different vehicles available for you to have a tax-free retirement and then have a safe retirement and build up that tax-free wealth, So that's the number one area. Number two area. Now let's talk about, your responsibilities are going down, your wealth is going up, you are doing well. So you are at age maybe 50, 55, you're driving and you met with an accident and you got disabled. That can happen to anybody, right? People get hurt. or you're climbing on a stairs, you fell down, you get disabled. What happens? Yeah, or you can have a critical illness too, or a chronic illness, or a terminal illness. Actually, I lost one of my close friends to cancer. So that can happen to anybody. So all of these three living benefits are included in this vehicle on this IUL policy with no extra charge to you. So if anything to happen to you, you get money from the insurance company. You don't really have to die to get that money from them. So that is the number three area, is the living benefit. So if you look at it right now, in US, there are about 50% of bankruptcies. So I was telling you that previously, right, that we're all at one step away from bankruptcy. So if you don't have this vehicle, a lot of people don't have, and then they get disabled and they don't have long-term care, so they lose their income, and then they start, once you get disabled, you need your long-term care, you need your medical bills will be high. So what happens? You tap into your retirement savings, right? And once that is done, you're left with nothing but to file bankruptcy. And that's what most of the families in US are doing. Almost 50% of the bankruptcies happening are due to the medical bills. So but you see about 62% are because of illness and medical. 40% of debtors suffered income loss a result of an illness. 76% of households owe on medical bills, and 47% have credit card debt and results of medical expenses. So it is, we all know, how expensive the medical bills are, right? So that's where more people are filing bankruptcy due to the medical issues. So we want to make sure that any vehicle we're investing in, that it will protect us in that in that time of need, when we'll be going through those disability or due to illness or due to accidents. There is also a fourth area we teach people is will and trust. How many of you have a will? Can you tell me a yes or a no right now? How many of you guys have a will? No? Yes? Okay, good. No? So, if you look at it, not a lot of people have will. We always think about it, but we never do. But, it can have a major impact in our life. Like, suppose, I'm just giving you an example. Husband and wife goes on a dinner, meet with an accident, they pass away, and their parents are living with their kids in their house. What will happen to them? Even though they have $1 million sitting in the bank, if they don't have a will, their house are going to be sold off. The kids are going to be sent to the foster care. Your parents are going to be homeless. Your family will just go through hell if you don't have a will. So we, educate people on creating their will and making sure that all of their family is taken care of, something to happen to them. So these are the four areas we help people. So basing on this, what do you guys think? Which areas you think you would need help, or someone who needs that help? I would say all of it, right? If not, at least number two is where it interested me when I joined this business, to build that tax-free wealth, and also I am now protecting my family in number one area, and also I know that my number three is covered, and I have prepared a will for my family as well. So what we teach is people how to conquer their financial future. This is just making sure that people are aware of the different vehicles they have. What are their financial responsibilities to their family? With a dime principle, how do you calculate the financial responsibility today, and how to protect the family? What are the power of the index contracts? Imagine being able to participate in the success of the market with a zero loss guarantee. How to reduce your medical expenses risk. We're most likely to get sick before we die, as you all know. And then finally, how to retire at income tax-free life. Taxes are the biggest threat if you look at it to your long-term financial independence. So, and then I'm just going to quickly go over through, reduce your medical expenses. We talked about how the accelerated living benefits are essential. We're more likely to get sick before we die because of, heart attack, stroke, basic cancer. Health insurance will not cover all your costs. But you'll have all of these different bills to pay, mortgages, lost wages, utilities, food, college, deductibles, all of this we still have to make, but the health insurance will not cover all those. At 65 years of age, we go on Medicare, but the Medicare will not pay for long-term care services after the first 100 days. And the life insurance that you don't have to die to use. This is very important. That imagine being able to have access to your life insurance death benefit instead of using your lifetime savings of covered chronic, critical, and terminal illness. So the chronic illness is something like heart attack and coronary bypass, stroke, invasive cancer. So this kind of talks about how much you get paid at different ages. And then same thing for the chronic illness. If something to happen due to a chronic illness, you get these are the different payments you get from the insurance company. And the terminal illness, if you get diagnosed with cancer, you get almost close to whatever your face amount is before you die, to pay off your medical bills or to go on a vacation or take care of your family, whatever way you do, right? So these are the 6 steps we teach people to financial security. The one is increase the cash flow. How to earn additional income and manage your expenses. How to consolidate your debt and eliminate your debt, how to have an emergency fund, at least have 3 to 6 months of income and prepare for unexpected expenses, and protect against loss of income, protect the family assets, and build wealth, outpace the inflation and active money management, and preserve wealth, which is avoid the probate and reduce the taxation. So if you want to know more about any of these products, you can contact the person who invited you to this webinar. Just reach out to them. If it was me who invited you, please reach out to me. I can give you more information. Or if you're invited by someone else in my team, please reach out to them, and then they can help you get more information on any of these 4 areas if you're interested in. But there's another thing is you can become a business partner on this and make a substantial income helping families. If you see that this has value, you can help other families. If you know your friends, your families, your coworkers, your anybody, or your teammates, whoever you have, if you're interested, you can become a business partner and make a substantial income helping families. Do you guys want to know more? Yes? Okay, good. Okay, so I'm just going to quickly cover that, and then we got about 25 minutes left, so I'm just going to quickly go through it. So the company which I'm with is called the Hedgeman Group International, HGI. It's called the Leaders with Vision, Helping People with Dreams. So this is the business overviews. HGI was built by entrepreneurs for entrepreneurs. We give you a chance to be in business for yourself, but not by yourself. HGI is a financial services marketing company that provides life insurance, annuities, business services, consumer services, and other financial products and services in the United States and Mexico through a network of independent associates. Is one of the fastest growing independent financial services company in America and provides innovative and industry disruptive solutions to Middle America and beyond. We have the perfect market. So if you look at it, the millennials, which are about 82 million, born between 77 to 97, we have products to help them. We have products to help Generation X, 64 million of them, to help them on their wealth accumulation and tax benefit. we can help the baby boomers, which are about 76 million of them, to how to preserve their wealth and how to grow their wealth. And finally, to the seniors, about 40 million and more with their retirement income. So we have the perfect market. We have the whole demographics available to us. And we work with, we're an independent marketing company, so we work with various major insurance providers like AIG, Allianz, Midland, Athene. And then we also have other providers, like NetLaw, which can help on the will. We have IDSIL, Legal Shield, Payrock. There's a lot of other financial companies we work with through AGI. And we offer a risk-free business opportunity. Most people dream of building their own business and controlling their own destiny. But if you look at it, if you're to buy a business in today's market or an established business, it will cost you at least $50,000, $100,000, right? Or if you want to start something small, even at the small level, also you are looking at least a couple of $1,000s. But AGI has the best platform for entrepreneurs. The cost to start is $150 only, and there is nothing else is involved. AGI, to join this business, you only have to pay $150. You started as an independent contractor. And then if the state insurance licensing fees varies depending on, obviously you have to be licensed because these are state regulated products. So you have to take a state insurance, which is very easy to do. I was able to get it within a week's time. And people have done it as quickly as like 3 days. And the cost is also very effective, like $50 for the application, $50 to sit in the exam, and then I think $48 for the fingerprinting. So another $150 you're looking at to get the state license. There are no franchisee fees. AGI is not a franchisee, does not charge any franchisee fees. There is no loss of job security. You can earn while you learn. So you don't have to learn everything on the first day. While you are learning, you can actually earn, and I'll show you how in the next slides. And there are no experience needed. AGI offers people from all backgrounds. I'm from the IT background. I have met people who are realtors, who are mortgage officers, who were even professors, even doctors, who have been with AGI. So it can be any background. People can work from any profession to this. AGI has a cutting edge technology. With AGI, you have technological business in a virtual box. On the back office, it's called the Aristotle. It manages your business, the production, and get the training that you need. Everything is in one place. AGI TV and preferred provider training, weekly broadcast on how to build your business, digital brochures. You get all the brochures and all are smartphone compatible. Multimedia presentations, like the ones which I'm using, that's also available there. And then the text message assistant, for the instant access information. So that is a format called Leadership Format System. It's a proven, predictable, profitable, self-replicating, self-motivating, and self-finance system. It has generated over $2 billion in payouts, 20 million sales, 2.5 million associates, launched 2 separate billion-dollar market cap companies, and twice number 1 in the industry sales. You run the system, and the system will build your business. You don't have to do anything else. You just follow the system, and you'll generate. You just have to not quit. I mean, that's one of the things we'll teach you, is to never quit. If you be consistent and disciplined, you're bound to get success. And there is an infinity compensation plan. AGI has multiple ways for its associates to earn income. One is a personal production. You can be a licensed agent and make substantial income by yourself by providing our solutions to clients and by referrals to our financial referral providers. There can also be field training. You get paid for training new associates in the field. Once you are become a leader, you can go in the field with the training and you get a 30% commission. Overrides. You earn income from the sales and financial referrals, your marketing team. So once you start building up your marketing team, you get overrides from there. And finally, the residual income. You earn ongoing income on certain product sales and financial referrals every year. So this is the compensation plan. So when you join as a training associate, your commission level would be at 30%. And after 3 training cells, you would be bumped up to 45%. And once you have 5 licensed agents in your team, you become a marketing director and you get 60% commission at that time. And once you get 10 licensed agents, you are at 78% of commission. So I will go through an example to make it clear. So just kind of look at, you can actually get up to 83% or more commission, in this business from every product you sell. And I'll go through an example to make it clear if it is not clear to you. So let's take an example, like a hypothetical example, right? Option 1, you work as an independent agent. You earn 45% commission after 3 policies. If you sell one policy of $250 a month to one family per week, let's say you just help one family in a week, and you sell a policy of $250 a month. Typically, our policies are $700 to $800 because that's kind of a savings to a retirement. But I'm just taking the low number, $250 a month. Your total annual premium would be $1,000 into 12. So $250 into 4 families, $1,000. And 12 months, your annual premium will be $12,000. You get paid on this annual premium. So on the $12,000 and at 45% commission level, your commission would be $5,400 per month, which is about $65K a year. Do you think this will work for you? I'm sure there's a lot of people, in US not earning that much money, right? But that is even better. So that is an option to create your own agency. There is no extra cost involved here. If you decide to just be an independent agent, you can be. But if you want to grow, create your own agency, you can hire 5 more agents to join you. And then you start making 60% commission with a total of 5 licensed agents in your agency. So you are at a marketing director at that time. And if each agent makes the same amount of volume, let's say $12,000 in annual premium per month, at 45% commission, each will earn $5,400, right? Plus, you will earn an override of 15% from their sales because they're at 45% and you are at 60%. So you get that 15% override. So which amounts to $1,800 per agent, a total of $9,000. Plus, you earn 60% commission on your personal production, which amounts to $7,200 a month. So if you add them together, a total commission of yours and the overrides you receive will amount to $16,200 a month, which amounts to $195K a year. Does that sound good? Let's look at option 3. You decide to work full-time. Up to option 2, you can actually do part-time, right? And I'm thinking once you are making $195K a year, you can go full-time at that time and build a team of agencies. There is no extra cost involved here. All you need is to help one of your agents to become an MD, just like you did. You just have to help one of your agent to be an MD that he or she has 5 agents under him or her. And then you become an RMD. It's called the regional marketing director. And you start making 78% commission with a total of 10 licensed agents in your agency. So if you look at this, even though those agents are under that agent, those 5 agents, they will be counted as a total of 10 agents in your agency. And your commission will bump out to 78%. And the person who has 5 agents will be called a marketing director and will earn $16K a month, like we described in option 2. And you will become a regional marketing director and you will earn an override from their sales. Assuming every agent is helping 4 families a month, collecting $250 a month in premiums, 4 agents under you, override of 33%, you're making $13,200. 1 MD override, At 18%, for those 5 agents, you're making $9,000. And your personal production, now you are at 78% at $7,800, a total of $30,000 a month, 360K a year, which is very much possible. I have seen leaders in the team making much more than this. They have a much bigger team. They started a year, 2 years back, and this is absolutely possible. And there is no limit on how many agents you want to make or where you want to make. You can hire people from Hawaii, you can hire people from Massachusetts or from Florida, wherever you have connections, wherever you can meet people and talk to them and explain these benefits. I think if you can explain them, I'm sure they'll be interested. And a lot of us look for a plan B or a second income. This is a perfect thing for them to start part-time. So these are some of the examples which kind of tells you, like, if you want to do a personal, you want to stay personal, you can make up to 115,000. If you want to make an R&D agency, you can make up to $500,000. And if you want to expand, like build 5 R&D agency, you can go up to $1 million or more. And AGI does also recognize and give rewards. Like if you are, able to meet the target, and make certain production, they will send you all expenses paid to one of these locations. The last year the team was sent to Hawaii, to Maui, and this year I think they're being sent to Utah or someplace exotic. So they always have all these promotions to reward you with all your hard work. And there are 2 world-class events happen in a year. We just had one in Las Vegas last month, and there is one more coming up in February, where we get these great leaders who come and talk, like people like Grant Cardone, people like Paul Dietrich. All of these guys, they come in and give us inspiration and the motivation, and these are great events to attend. So getting started with AGI is very easy. Each new associate will be paired with a mentor. So number one is you'll conquer your future and join AGI. You create a business plan with your mentor. You identify the people who can join your team. You start your financial independence plan. You complete the AGI training program. Everything is there on the back office, and you build your business. So again, I'm just kind of reiterating, what is the cost to join this program? $150 one-time joining fees. There is no other cost involved. Licensing fees, which should go to the state to obtain the license, $50 for fingerprinting, another $50 for taking the exam, and $50 for applying the state license. Again, the exam, studying for the course is very easy. As I said, I passed in a week, 90% above, 70% is the pass rate. So it's very easy to take, but these are the costs involved. I want to just go through those. And then why should you join my team? That's another question you may have in your mind, right? So we have weekly training calls twice, one on Tuesdays at 7 p.m. and once on Saturdays at 10 a.m. at the Louisville office. So these are person face-to-face meetings or trainings. And I run these weekly webinars with this presentation every Wednesday at 7 p.m. Central. And you can, once you join my team, you can invite your friends, your families, your acquaintances to join this and then listen to it. So you don't have to do anything. I will do all the explanations so that they can hear, and then they will contact you if they want to buy products from you or they want to join you as a business partner. And I will personally help you recruit 5 agents and make you an MD. So that is my, I cannot say it's a guarantee, but that's what my commitment to you is, to make sure that each of you become an MD, which will be a win-win situation. It will be a win situation for you as well as for me. And there is an online training call on Thursdays at 9 p.m. Central. There's an online. Suppose you are not able to come to the Louisville office, you can do it remotely. And we have a team of leaders who will personally help you step by step, guide you, teach you, mentor you on each step of the way. Everybody is so approachable, including my leaders, and I'm always there for the team, so you can always reach out, and I will help you out, or any of the leaders in our team will help you out as well. And you can take our leaders with you for the initial presentation to your client. Let's say you are getting started, and you just got the license, and you found a client, and he wants to learn about these products. I would advise that you take a leader with you, like a field trainer, so that he can then present that to the client. And then obviously you would have to share 30% of commission, but it will be worth it, as it will be a learning experience for you. It'll almost like you're earning on the job. Like, you go with them, he will or she will do all the explanation, and you get a commission from them. How good is that? And if you're outside of Dallas, there is most probably an AGI office near to where you live. So if you just let me know, I can definitely find someone, some leaders who are there who can help you as well. So it's time to start dreaming again. Imagine what your quality of life could be. Imagine what it would be like to control your life. Imagine if you could have it all. Imagine if money was not a concern. Imagine the life your children could have. Imagine the trips you would go on. Imagine the life you would live. Just imagine. This is all possible in this business. But you need to have the faith and the trust, the consistency and the discipline, and never quit attitude. So say yes to your dreams, and I hope that this presentation was beneficial to you, and you are going to join me or learn more about the products and reach out to either me or the person who has invited you. And if you're interested, you can visit this website, and I'm just gonna um, let everybody know the website again. It's called www.hgicrusadelife.com. And you can go to this website and you can join HGI, and all you have to pay is $150, and then you'll get started. If you have any questions, so now I'll just open it up for any questions, guys. So if you want to just type it in, and then I will answer it online here. Okay. Yeah. So if you want to reach out to me, I think there's a question, how to reach out to me. Again, my email address is um, this, and my phone number is, you can reach out to me, text me, or email me. I'm available. Okay. There's another question. How long ago you started? Yeah, I got started about 7 months ago, um, and I got my license within a month, and then I have been kind of doing this. I'm doing this part time. I'm a IT guy, obviously. I do this part time, and I'm getting really good results. And I'm very hopeful that this would be my full time business in a year or so. I'd like to come in person and understand this more. When can I come? Yeah, definitely. You can. So if you want to just text me the number I just sent you, or my email address, skb7974@gmail.com. It is there on the website also. Like, if you go to hgicrusadelife.com, you would see my picture, my phone number, my email address. So if you want to just text me after this, I will, then we can set up a time this weekend and we can connect. Great. Okay, I think that's all I have, folks. Again, I want to just thank you all for sparing 1 hour of your life, with a busy life, coming to this presentation. And I hope that you're able to learn something new today, and hopefully you'll be able to, utilize that in your life. Even though if you decide not to join the team, that's absolutely fine. But I'm hopeful that you learned something new today, and it will be beneficial to you and your future. I would like to thank you all. And with that, thank you again. Have a good night.